Chapter 7 Stock Markets Index 7.1 Overview. If I were to ask you to give me a real time summary on the traffic situation, how would you possible how would you possibly do it? Your city may have thousands of roads and junctions. It is unlikely you would check each and every road in the city to find the answer. The wiser thing for you to do would be to quickly check a few important roads and junctions across the four directions of the city and observe how the traffic is moving. If you observe chaotic conditions across these roads, then you would simply summarize the traffic situation as chaotic, else, traffic can be considered normal. The few important roads and junctions that you tracked to summarize the traffic situation served as a barometer for the traffic situation for the entire city. Drawing parallels, if I were to ask you how the stock market is moving today, how would you answer my question? Drawing parallels, if I were to ask you how the stock market is moving today, how would you answer my question? There are approximately 5,000 listed companies in the Bombay Stock Exchange and about 2,000 listed companies in the National Stock Exchange. It would be clumsy to check each and every company, figure out if they are up or down for the day, and then give a detailed answer. Instead, you would check few important companies across key industrial sectors. Instead, you would check few important companies across key industrial sectors. If majority of these companies are moving up, you would say markets are up. If the majority is down, you would say markets are down. And if there is a mixed trend, you would say markets are sideways. That means markets are moving upwards, markets are moving downwards, or the markets are sideways. That is a combination of ups and down. So essentially identify a few companies to represent the broader markets. So every time someone asks you how the markets are doing, you would just check the general trend of these selected stocks and then give an answer. These companies that you have identified collectively make up the stock market index. 7.2 The index. Luckily, you need not actually track these selected companies individually to get a sense of how the markets are doing. Luckily, you need not actually track these selected companies individually to get a sense of how the markets are doing. The important companies are pre-packaged and continuously monitored to give you this information. This pre-packaged market information tool is called the market index. There are two main market indices in India, that is the S&P BSE Sensex representing the Bombay Stock Exchange and CNX Nifty representing the National Stock Exchange. S&P stands for Standard and Poor's, a global credit rating agency. S&P stands for Standard and Poor's, which is a global credit rating agency. S&P has the technical expertise in constructing the index, which they have licensed to the BSE. Hence, the index also carries the S&P tag. The CNX Nifty consists of the largest and most frequently traded stocks within the National Stock Exchange. It is maintained by India Index Services and Products Limited (IISL), which is a joint venture of National Stock Exchange and CRISIL. In fact, CNX stands for CRISIL and NSE. In fact, CNX stands for CRISIL and NSE. An ideal index gives us minute by minute reading about how the market participants perceive the future. The movements in the index reflect the changing expectations of the market participants. When the index goes up, it is because the market participants think the future will be better. The movements in the index reflect the changing expectations of the market participants. When the index goes up, it is because the market participants think the future will be better. The index drops if the market participants perceive the future pessimistically. 7.3 Practical uses of the index. Some of the practical uses of the index are discussed below. 1. Information. The index reflects the general market trend for a period of time. The index is a broad representation of the country's state of economy. A stock market index that is up indicates people are optimistic about the future. Likewise, when the stock market index is down, it indicates that people are pessimistic about the future. For example, Nifty value on 1st January 2014 was 6301 and the value as of 4th June 2014 was 7580. This represents a change of 1279 points in the index of 20.3% increase. This simply means that during the time period under consideration, the markets have gone up quite significantly, indicating a strong optimistic economic future. The time frame for calculating the index can be for any length of time. For example, the index at 9:30 am on 25th June 2014 was at 7583, but an hour later it moves to 7565. A drop of 18 points during this period indicates that the market participants are not too enthusiastic. And second use of the index is benchmarking. For all the trading or investing activity that one does, a yardstick to measure the performance is required. Assume over the last 1 year you invested 100,000 rupees and generated rupees 20,000 return. To make your total corpus rupees 100,000 rupees. How do you think you performed? Well, on the face of it, a 20% return looks great. However, what if during the same year Nifty moved to 7,800 points from 6,000 points, generating a return of 30%? Well, suddenly it may seem to you that you have underperformed the market. If not for the index, you if not for the index, you can't really figure out how you performed in the stock market. You need the index to benchmark the performance of a trader or investor. Usually, the objective of market participants is to outperform the index, not underperform the index. And third use of the index is trading. The trading on the index is probably one of the most popular uses of the index. Majority of the traders in the market trade the index. They take a broader call on the economy or general state of affairs and translate that into a trade. For example, imagine this situation. At 10:30 a.m., the finance minister is expected to deliver his budget speech. An hour before the announcement, Nifty index is at 6,600 points. You expect the budget to be favorable to the nation's economy. What do you think will happen to the index? Naturally, the index will move up. So, in order to trade your point of view, you may want to buy the index at 6,600. After all, the index is the representation of broader economy. So, as per your expectation, the budget is good and the index moves to 6,900. You can now book your profits and exit the trade at a 300 points profit. Traders such as these are possible through what is known as derivative segment of the markets. Traders such as these are possible through what is known as derivative segment of the markets. We are probably a bit early to explore derivatives, but for now, do remember that index trading is possible through the derivative markets. And fourth use of index is portfolio hedging. Investors usually build a portfolio of securities. A typical portfolio contains 10 to 12 stocks which they would have bought from a long term perspective. While the stocks are held from a long term perspective, they could foresee a prolonged adverse movement in the market, say in 2008, which could potentially erode the capital in the portfolio. In such a situation, investors can use the index to hedge the portfolio. In such a situation, investors can use the index to hedge the portfolio. We will explore this topic in the risk management module. And 7.4 Index construction methodology. It is important to know how the index is constructed or calculated, especially if one wants to advance as an index trader. As we discussed, the index is a composition of many stocks from different sectors. As we discussed, index is a composition of many stocks from different sectors which collectively represents the state of the economy. To include a stock in the index, it should qualify certain criteria. Once qualified as an index stock, it should continue to qualify on the stated criteria. If it fails to maintain the criteria, The stock gets replaced by another stock which qualifies the prerequisites. Based on the selection procedure, the list of stocks is populated. Each stock in the index should be assigned a certain weightage. Weightage, in simpler terms, define how much importance a certain stock in the index gets compared to the others. For example, if ITC Limited has 7.6% weightage on Nifty 50 index, then it is as good as saying that the 7.6% of Nifty's movement can be attributed to ITC. The obvious question is, how do we assign weights to the stock that make up the index? There are many ways to assign weights, but the Indian Stock Exchange follows a method called free float market capitalization. But the Indian Stock Exchange follows a method called free float market capitalization. The weights are assigned based on the free float market capitalization of the company. Larger the market capitalization, higher the weight. Free float market capitalization is the product of total number of shares outstanding in the market and the price of the stock. For example, company ABC has a total of 100 shares outstanding in the market and the stock price is at 50. When the free float market capitalization of ABC is 100 into 50, that is rupees 5000. At the time of writing this chapter, the following as per table 7.1 are the 50 stocks in the Nifty as their weightage. Table 7.1, Nifty stocks as per their weightage. Serial number, name of the company, industry, weightage. 1. ITC Limited, industry cigarettes, weightage 7.60%. 2. ICICI Bank Limited, industry, banks, weightage 6.55%. And 3. HDFC Limited, industry, housing finance, weightage 6.45%. And 4. Reliance Industry Limited, industry, refineries, weightage 6.37%. 5. Infosys Limited, industry, computer software, weightage 6.26%. And 6. HDFC Bank Limited, industry, banks, weightage 5.98%. And 7. TCS Limited, industry, computer software, weightage 5.08%. 8. L&T Limited, industry, engineering, weightage 4.72%. 9. Tata Motors Limited, industry, automobile, weightage 3.09%. 10. SBI Limited, industry, banks, weightage 2.90%. 11. ONGC Limited, industry, oil exploration, weightage 2.73%. 12. Axis Bank Limited, industry, banks, weightage 2.50%. And 13. Sun Pharma Limited, industry, pharmaceuticals, weightage 2.29%. 14. M&M Limited, industry, automobiles, weightage 2.13%. And 15. HUL Limited, industry, FMCG, weightage 1.87%. 16. Bharti Airtel Limited, industry telecom services, weightage 1.70%. 17. HCL Technologies Limited, industry computer software, weightage 1.61%. 18. Tata Steel Limited, industry metal steel, weightage 1.42%. 19. Kotak Mahindra Bank Limited, industry banks, weightage 1.40%. And 20. Sesa Sterile Limited, industry 20. Sesa Sterlite Limited, industry mining, weightage 1.38%. 21. Dr. Reddy's Lab Limited, industry pharmaceuticals, weightage 1.37%. 22. Wipro Limited, industry computer software, weightage 1.37%. 23. Maruti Suzuki India Limited, industry automobile, weightage 1.29%. 24. Tech Mahindra Limited, industry computer software, weightage 1.24%. 25. Hero MotoCorp, industry automobile, weightage 1.20%. 26. NTPC Limited, industry power, weightage 1.15%. 27. Power Grid Corporation Limited, industry power, weightage 1.13%. 28. Asian Paints Limited, industry paints, weightage 1.10%. 29. Lupin Limited, industry pharmaceuticals, weightage 1.09%. 30. Bajaj Auto Limited, industry automobile, weightage 1.07%. And 31. Hindalco Industries Limited, industry metal aluminium, weightage 0.95%. 32. Ultratech Cements Limited, industry cements, weightage 0.95%. 33. IndusInd Bank Limited, industry banks, weightage 0.94%. 34. Coal India Limited, industry mining, weightage 0.93%. 35. Cipla Limited, industry pharmaceuticals, weightage 0.89%. 36. BHEL Limited, industry electrical equipment, weightage 0.79%. 37. Grasim Industries Limited, industry cements, weightage 0.79%. 38. Gale Limited, industry gas, weightage 0.78%. 39. IDFC Limited, industry financial services, weightage 0.74%. 39. IDFC Limited, industry financial services, weightage 0.74%. 40. Cairn India Limited, industry oil exploration, weightage 0.72%. 41. United Spirits Limited, industry distillery, weightage 0.70%. 42. Tata Power Corporation Limited, industry power, weightage 0.68%. And 43. Bank of Baroda, industry banks, weightage 0.63%. 44. Ambuja Cements Limited, industry Cements weightage 0.61%. 45 BPCL industry refineries weightage 0.58%. 46 Punjab National Bank industry banks weightage 0.55%. 47 NMDC Limited industry mining weightage 0.52%. 48 ACC Limited industry cements weightage 0.50%. 49 Jindal Steel and Power Industry Steel weightage 0.38%. 50 DLF Limited Industry Construction weightage 0.34%. As you can see, ITC Limited has the highest weightage. This means the Nifty index is most sensitive to price changes in ITC Limited and least sensitive to price changes in DLF Limited. This means Nifty index is most sensitive to price changes in ITC Limited and least sensitive to price changes in DLF Limited. 7.5 Sector specific indices. While the Sensex and Nifty represents the broader markets, there are certain indices that represents specific sectors. These are called sectoral indices. For example, the Bank Nifty on NSE represents the mood specific to the banking industry. The CNX IT on NSE represents the behavior of all the IT stocks in the stock markets. Both BSE and NSE have sector specific indexes. The construction and maintenance of these indices is similar to the other major indices. Key takeaways from this chapter. 1. An index acts as a barometer of the whole economy. 2. An index going up indicates that the market participants are optimistic. And 3. An index going down indicates that the market participants are pessimistic. 4. There are two main indices in India, that is the BSE Sensex and NSE's Nifty, that is BSE Sensex and NSE's Nifty. 5. The index can be used for a variety of purposes. 1. Information. 2. Benchmarking. 3. Trading. And 4. Hedging, portfolio hedging. 6. Index trading. Index trading is probably the most popular use of the index. 7. India follows the free float market capitalization method to construct the index. 8. There are sector specific indices which convey the sentiment of specific sectors.